Hi traders, welcome to the live webinar here with myself, Chris Svorcik, and Elite Currency. We're going to take a look at how you can use moving averages for understanding price swings and specifically wave counting in general. For easy and simple wave counting, basically. Waves, of course, give you a lot of information about the structure of the chart and the price, and moving averages makes all of that so much easier. I think you'll see the value of this method in this webinar. It's a quick introduction, so more of that will be explained in my SWAT course, where I dive into great detail. Of course, we cannot cover all of those aspects in a short webinar. So if you're interested in this topic and you think that these ideas, concepts, and tools will help you as a trader, then I certainly invite you to become a SWAT member, of course, or try my SWAT ebook for just 24 euros and 95 cents. So let's dive into today's topic. First of all, alrighty. Good. So in my euro dollar, pound dollar videos of recently, you might have seen the value of the 21 EMA zone already. As you can see here, price was basically making a correction sideways, and then rebroke below it the second time and even the third time. And I said at that time, if it breaks below the support trend line and the 21 EMA zone, we should see one more push down in the wave 5 of C. And that's what we got. And you can see that once we got the break below 20 EMA, either here or here, there was a strong move below it, and price stays below the 20 EMA zone. So once you get price moving stably below the 21 or above the 21 EMA zone, typically you're looking at a very nice kind of price action movement that could be considered impulsive. So it's a great moment to try to catch a bigger win, to try to catch more profit, extra profit there, and try to catch that run into that direction. So certainly if the 21 EMA has a good angle, or if price is nicely moving below it like that, that's a great sign of impulsive price, and it's typically could be some kind of impulsive wave, like with 1, 3, or 5. It depends on the bigger structure as well, but that's why having the 21 EMA zone, let's say price moving away from it with a good angle of the 21 EMA zone, it's just a very good piece of price action that is great for trading and keeping the trades open. Now, I personally use my SWAT candles, and you can see that gives you a lot of information about the direction. And here you can see we had red candles falling below it, red candles falling below it. Now, some of these red candles are not going to work too well, like in here, because there's a bigger correction taking place. So this breakout didn't go anywhere because there's a bigger ABC to the upside before we got the downside, as you can see. So that's why sometimes the first break below 20 could be difficult, as you can see here, because it is making a bigger A, B, C. So the red candles here represent a wave B. Now, don't get me wrong; these blue and red candles are just simplified ways of trying to spot the price action that is bullish or bearish. I think it's quite useful, but it's not a must. But I did want to show it to you because I think it's visually very simple to see that here we have all the moving averages aligned almost perfectly. Not that perfect because the 610 is in the middle, but here we have also 21 EMA aligned with the 144 and 233 EMA. So price versus 21 EMA zone is a very important starting spot for understanding the wave structure and wave count, because it typically indicates either a wave A, C, 1, 2, or 3 if you have price nicely below or above it. Okay. In this case, when we're looking at this particular piece down, we were looking at probably a wave C, because this was probably wave A here, this push down. This was an ABC of wave B, and we were looking at a wave C down. Okay. Now, every time frame, you can use the same information, and you can you can analyze the price versus the 21 EMA. And you can do that for all time frames. So I wanted to focus on one time frame because, of course, if we started to add multiple time frame analysis to the mix, it might soon get more complicated. And I want to start simple so that everyone follows along. Okay. But even here, you can see how price was breaking below the 21 EMA zone after a substantial uptrend, where price was most of the time above the 21 EMA zone. That's why I marked this as an A, and this pushed to the up as a B. Part of that reason was because this is how you can see how price was pushing below the 21A and how price was unable to break above the 21A. So part of the reason why I named this an A, B, and expected a C was based on this price versus 21 EMA analysis on the daily chart. But I want to focus on the 4-hour chart, don't get me wrong. But just to give you context, even here it helped, give you that context. You even had here, you can see a push below the 20 MA. That was a wave A. You had a failed push above the 20 MA, which was a wave B, and one more push below the 20 MA, which was wave C. Now, ultimately, this turned out to be a correction because the bigger picture, the bigger trend here too, was still up. So with the moving averages all aligned to the upside and the ABC over, we had one more push above the 20 MA zone for, in this case, a fifth final wave. Maybe not final, but within, for that moment, for quite a while at least, this was the last push up, and we're still in this correction down, as you can see. So as price broke above the 20 MA, we had a nice push up. As you can see, many candles riding above that 21 EMA zone for the fifth wave. Okay, so you can see how valuable it is just to look at price versus the 21 EMA zone on this daily chart, all time frames. But let's go back to that 4-hour chart. Okay, so we had ABC, fifth wave, AB. So based on this analysis, we're expecting wave C down. That's what we got. So let's zoom into that 4-hour chart then. And we got to push lower. We got an impulsive push with the price action already below the 20 MA here. And then we got a pullback that respected the 21 MA zone and then broke below the 20 MA zone here. So at that moment, we're thinking two things. Either this is probably wave 1, 2, but is the wave 2 finished? Could the wave 2 go higher? And to be honest, it could. So at this point, the price action at the 20 MA zone is quite important, because if price were to linger here sideways for quite a while, it could make another leg up like this, make an ABC up, and then move lower again in the wave 2. But in this case, it actually broke below these fractals and the 21 EMA zone, and it made a dash down. And when it made that break, it's likely, specifically also below this low and these kind of closes, all of these support layers, basically every break kind of makes it more and more likely that we're going into some wave 3 to the downside. Okay, and you can see that price action nicely staying here below it for a continuation lower. Then we see that price made an upside, correction, and upside. All right, so at that moment, we're expecting some type of bullish correction, and that's what we were expecting. I thought the bullish correction would go higher, but we said if it breaks through this support trend line or this one or both, then it is likely still not finished, and we're still looking at a wave 1, 2, 3, 4, and we're looking at a wave 5. So that's what happened. We had this break, so we had a wave 1, 2, and this confirmed the 3 of 5. 3, a light pullback for 4, and 5 to complete the wave 5 of C. So you can see how the 21 EMA zone indicated the wave 2, the wave 4 here, the wave 2 of 5, the wave 4 of 5. Here we had a very light hit twice, as you can see on the edge, but still enough, a shallow wave 4, but enough to confirm it, and the wave 5. So you can see that as price goes back to the 20 MA zone, it is typically some kind of wave 2 or 4, and when it moves away from it, or B, sorry, and when it moves away from it, it could be a wave wave C, 1, 3, or 5, maybe sometimes even a wave A. Okay, so the price versus 20 MA zone gives a lot of information about the wave count, impulse, and correction when there's a trend. course, when there's a range, this can be a little bit more trickier and things might be less clear. So we'll dive into some examples like that. But I want to explain the principle of how one could use moving averages for understanding wave patterns. And it's really, really a beautiful technique, I think. And it gives so much information so quickly that, yeah, as you can see, of course, I'm a big fan. This is a major component of my SWAT methodology. And of course, my SWAT methodology is fully explained in 20 plus videos with, I think, 70 plus videos with 20 plus hours of material there in total. But I have to add that just because it's lengthy doesn't mean it's complicated. I just break down the topics and dissect it very carefully so that everyone can learn and everyone can understand it. But doesn't mean it would have to take you that long to go through it. Okay, it's just um, a very course that properly explain or tries to properly explain everything in detail. So that's why it's that long, not a must. Anyhow, then so eventually this wave 5 of C is over. I think I correctly indicated that already, that it could happen between 117 and 117.50. And that's why I was already bullish in this spot when we had the break above the 20-MA, because here on the 1 hour chart, we had 5 waves up and ABC down. And basically the break above the 20-MA, the bounce of the 21 EMA zone here. You can see how SWAT candles nicely indicating that here. Look at the blue candle, blue arrow, second break above the 21 EMA zone. In this case, the move is against the longer term moving averages, but we have other things that indicate that a reversal are likely. 5 waves completed, divergence pattern between these bottoms, a strong support zone at 117, 117.50. We have a 5 wave pattern, So there are all kind of factors coming in that explain that, look, this break above the 20-MA is probably indicating the reversal and the end of the downtrend. And the bounce is extra confirming it, and the second break even extra confirmation that we're starting probably an ABC up, or maybe even a 5 wave pattern up. So as then price starts to push above the 20-MA zone here for the second time, we got a beautiful run up, indeed, with momentum. Price moving away from that 21 EMA zone, as you can see, and then price goes sideways. So this impulse probably wave 3, this sideways probably wave 4. Price respecting the 21 EMA zone. So we had a wave 2, of course, here, and a wave 4 here, and we're moving up for wave 5. So we have a 1, 2, 3, 4, 5. Now, this all might seem logical retrospect, right? But keep in mind that all of this I was talking about beforehand, pre-fact, in my Euro Dollar Pound Dollar videos. Feel free to go back to the Euro Dollar Pound Dollar videos that I did live throughout the last from beginning of March, and you'll see that all of this was discussed pre-fact. And you can see how the 20-MA zone helps again to identify that this is wave 2, that this is wave 4, that this is a 1, a 3, and a 5. So if we go down to the 1 hour chart, we would see some things more clearly, like this 5 wave pattern in the first wave, and the ABC in the second wave, and the 1, 2, 3, 4, 5 in wave 3, right? Even within wave 3, we had a wave 2 and 4 respecting the 21 EMA zone, with wave 1, 3, and 5 moving away from the 21 EMA zone. And you can see that wave 1, 3 move more from the 21 EMA zone than the wave 5. Wave 5 doesn't move as much. Then we have price oscillating around the 20 EMA zone, which is typical for an ABC pattern here, an ABC pattern here, right? That explains that correction. And then we had a push up again within wave 5. We have a wave 1, 2, 3, then an ABC again, oscillating around it. So we have basically ABC finishing wave 4, 3, 4, 1, and then a 5 starting with 1, 2, 3, 4, 5 up. So that's great to understand the wave patterns in general. So you can see that it works on all time frames, and you can see here 2, wave 1, 2, wave 1, 2, 3 here. Sorry, wave 1, 2, 3, 4, 5, 4, 5. So the 21 EMA zone is going to give you a lot of information about those 1, 2, 3, 4, 5s, ABCs, just off the bat, as you can see, just using that. Now, I personally have some indicators that help me indicate momentum. I have these diamonds here, as you can see. So typically, green diamonds for upside, red diamonds, pink diamonds for downside. So when you see diamonds like that, that means that price action has moved away from the 20 zone, 10 to 15 candles, like that, green diamonds. And that indicates momentum and confirms that price is moving away from the 20 zone for a substantial time, 10 to 15 candles. That typically indicates momentum. So that's kind of a confirmation that price is strong. So what that means is that what I'm looking for typically is a breakout, first or second breakout, like this or this one. But when you have diamonds, it doesn't mean it's not maybe that great for this time frame, but it could still be good for on lower time frames to catch one more push up or down. Here, as you can see, these pink diamonds indicated still one more push down. These green diamonds still indicated one more push up, right? Even here, one more push up. So they kind of give the possibility for catching some final wave 3 or 5s. They're a bit of later confirmation, one more push lower, but they often do provide still some opportunities for another push up. You can see strong momentum, so wave 4 and one more push up, right? But of course, if you want to catch earlier setups on this time on the time frame you're looking at, then typically it's better to look at 21 EMA zone, breakouts or bounces. For instance, with Ethereum, USD, I trade as price tested the bottom of the 21 EMA zone again here. I took a buy here because to me this looked like an ABC, and this seemed like a great discount here and here. So I actually traded the bottom of the 21 EMA zone on the daily chart because it seemed like a great discount within the strong uptrend. So look at all these diamonds indicating momentum. So this basically seemed like a discount for another push up, and that's what happened. Another push up happened then. Now, regardless if this is now declining, the strong push up from 1500 to 2500 happened, right? So that's important. And if you look at price action right now, it's falling, but it's still not even at the 21 EMA zone, right? So yeah, it basically is still a retracement. That's my point. So you can be very creative with the 20 EMA zone. This is one idea. It's not something I do often or aim for necessarily, but in this case it made sense because of the ABC pattern, and the 21 EMA zone was likely to hold as part of a wave 4. So that's just one example of that. We could look at Bitcoin too. Bitcoin, same thing, right? Look at the 21 EMA zone, how well it held here and here and here and here and here and here. Will it hold again? I don't know, because it's maybe not this time. Maybe we'll go a little bit deeper. I don't know. The retracement, but overall the trend is still up. So I do think that buyers will step in to push this again towards the previous highs at the least, right? But this gives you a lot of information about the wave position. Now that's the 20 price versus, very simply, price versus the 21 EMA zone is a wealth of information for me. Now, the other important point is the 144 EMA. Okay, it's the backbone of the strategy or the analysis, I should say. So because basically what we're looking at here is the 144 EMA here. It's typically a very important bounce or break spot. So the 21 EMA zone will hold for a while. Let's take a look at this run up here. This was this started the wave 5. So you can see price bouncing at the 610 EMA, breaking above it, then pulling back to the 144 and 233 twice, and then it started to make a run up that basically pulled away from the 144 EMA, right? So as it was pulling away from the 144 EMA, it stayed above the 20 EMA for a while. Here, correction, right? And then at the beginning, the price was moving away from the 20 EMA quite impulsively. Then it started to slow down, and the moves away from the 21 EMA slowed down too. You see, this is not as much, this is less. And here it didn't even move away from the 20 EMA zone. That's how you can see that some kind of rising wedge is being built because of the fact that you see that the angle here was very steep. Then we get somewhat shallower angle, then even shallower, and then very shallow, right? And you can see that here there was a big gap between price and the 21 EMA. Here there was a medium, here there was a small gap, and here there was no gap. So price is running out of steam. So the 21 EMA zone is not becoming that relevant anymore. It's not as strong as the support zone. So here we had a wave 1 probably and a wave 2 correction. As you can see, wave 1, ABC for wave 2. And then we had a wave 3 probably up to here, a wave 4 and a 5. And that's probably because of one of the reasons, slowdown of price, ending that upside, and the break below the channel, break below the 20 EMA zone first, but maybe the second time even more important, indicating the reversal. And that's what happened, big downside, as you can see. And in this case, yeah, the 144 EMA, price will go back to the 144 EMA, either back to it or if not a full reversal. So in this case, we had a break through it, in fact, and the 144 EMA becoming a resistance. So the 144 EMA is a bounce or break spot in the sense that here we had it as a bounce, as part of a wave 2. But here it was a break and indicating a reversal. So wave 144 EMA indicates, it's a great indication of waves 2 and 4 in general, and indicating reversals as well. They are used as a target for divergence patterns. So that's, if there's divergence, price should typically go to the 144 EMA. And that's where the divergence effect is ended. And that's where the trend can continue. Or if it breaks to the 144 EMA, when a reversal might take place. So here we had a reversal back down. Here we had a break, pullback, bounce, and continuation. Here we had price oscillating around the 144 EMA a little bit, which can happen too, kind of a range, and then but breaking below it again, and then creating this wave C, and now breaking below it in this bigger bullish reversal. So let me show you an example where we can use it for a wave count. Then we have also our Wiz tool, by the way, which is based off the 144 EMA, and it indicates how far price can go from the 144 EMA. So let's take a look at that. All right, so you can see here, price fell from the 144 EMA and made it all the way to the 8th Wiz level. But as price gets further and further from the 144 EMA, there's a higher and higher chance that eventually it will go and retrace back to the 144 EMA. The 144 EMA is like a magnet. So price can escape from it for a while, but eventually it will lose steam and make the correction back to the 144 EMA or more. Let's take a look at this example here. You can see too, price moving away from it, making it almost to Wiz 9, but then ultimately has to go back to the 144 EMA, and in this case, reverse. Let's take a look at here. You can see strong uptrend above the 20 EMA zone. Then we got the bigger ABC correction versus the 21. It retraces back to the 144 EMA, which is used as a bouncing spot several times. And the bounce at the 144 EMA keeps the uptrend alive. We get a re-break above the 20 EMA and another push up here, a very strong push up, as you can see. And before another move down to the 144 EMA and another higher high before we get a bigger correction. So as you can see, the 144 EMA, the reset moment for the uptrend twice, once here, twice here. And of course, the 144 144 EMA alignment with the long-term moving averages, confirming this beautiful uptrend here and here, besides being a bouncing spot here and here. And the 144 EMA is used for the whiz levels to indicate how far the trend has progressed, as you can see. Here it went all the way up to whiz 8, almost to whiz 9. Here it went even above whiz 9. So the whiz levels are based on Fibonacci sequence levels that are calculated from the 144 EMA. So yeah, they are great in many ways. They act as targets for divergence pattern. They act as the starting spot for the Fibonacci sequence tool, an indicator, the Wiz tool. They are bouncing spots or break spots. Bouncing spot for wave 2 and 4. Break spots when you have an ABC reversal. If the 144 EMA is flat, that could indicate a range. If it's aligned with a good angle, that could indicate the confirmation of an uptrend like we have here. So together with the 21, the 144, the Wiz, the long-term moving averages, you instantly have a roadmap that you can look at price and in most cases have a pretty good grasp of what's going on. Not always. There are going to be situations where on certain time frames things look complex and confusing. So I'm not going to sugarcoat it. That's just because sometimes price can make some difficult moves to understand or grasp. So not everything is going to be picture clear. But in my view, it greatly helps. It's like a great shortcut to understand the chart movements. And it could be used, this template, this method can be used on all time frames. So you can connect the dots and connect the swings with each other to see that bigger or smaller picture and find the trading opportunities that make sense at that time, really, to be honest, right? Like I said, on the daily chart here, we were looking at the context of a wave A, B, looking at the fact that the price was above the 144 EMA for very long. We had a break here. The price didn't go back to the 144 EMA for a very long time, but we did have divergence pattern. And as you know now that the divergence pattern is the target of the divergence pattern is the 144 EMA. So when we get divergence, we get a clear 5-wave up. We get 5 waves within 5-wave up finish. We have push below the 20 EMA. The context for wave A, B, and a C down back to the 144 EMA is there, and basically the 21, the price, the 21, the 144 help indicate that this is likely to take place, this push down, for instance, right? That's why on lower time frames we'll be able to find some trades in this swing down and swing up again on the 1 hour and 4 hour chart. So yeah, it's a very useful methodology because it can be applied to any time frame really to understand the market structure. It's just a great shortcut of getting a grasp of price swings, wave patterns, chart patterns on all time frames. In some situations, you might want to just stay clear of it because because the chart doesn't look interesting. But yeah, it does really help to give you that perspective. Okay. Yeah, I'm sorry to hear that, Wilson, about the sound problems. Yes, there will be a recording. All right, on YouTube. All right, so hopefully you can hear me there better. Okay. So here you can see when we had this downtrend on the euro dollar, for instance, right? So we had a break below the 144 EMA on this daily chart, push below the 144 EMA, price respecting the 21 EMA zone. Then we had a pullback into the 144, bounce there, and re-break below the 21 EMA. Then again, a pullback to the 144 EMA, bounce there, re-break below it. Again, pullback and bounce and re-break. Again, pullback and bounce. Then we had some volatility. Okay, where this was quite difficult with the COVID pandemic at that moment. We had a down, up, down. That was quite difficult. But in this case, I think still giving some information with the 21 EM break here and here, for instance, and here, but a little bit more volatile, a little bit more difficult, I think. And after that, again, very good to understand the structure here with uh, price staying around the 20-way and then breaking above it, indicating already that we might be looking at a bigger reversal. And as price breaks above the 143-way, we indeed got the confirmation of a big reversal. So I hope that, as I said, it's difficult to explain uh, these concepts in just a 30-minute webinar, but I did try my best to give you the general idea of how you can use moving averages to identify price swings and wave patterns. So I hope you got some clue. But if you're curious, definitely recommend my SWAT ebook or my SWAT course. SWAT ebook is just €24.95. Here, SWAT guide, 360-degree trading and analysis, or my SWAT course, where you will see right here. Let's see, hang on, at the very end, it's not moving here. My SWAT course, there we go. So I hope to see you as a member. Really, of course, keep in mind that all of these concepts are thoroughly explained in more detail. Obviously, in my course, I can, of course, explain a lot more in those sessions because I have all the time in the world. Here we just have 30 minutes or so. So, but still, I hope it helps. All right, and wish everyone great trading. Hope to see you once again as a member, and otherwise, have a great week. Cheers. Bye bye.